Good afternoon, everybody. How is everyone doing? Dan Tyler here from London Trading Institute. It's really, really awesome to be back on the live again. And hopefully we'll see lots of early birds in. I can already see that there's quite a lot of people that have joined already, which is amazing. I can see the first comments that have come in. Hot, absolutely baking. Yeah, so am I. You're not the only ones. It's unbearable at the moment, and we'll always find a way to complain. Hi Nick, hi Dan, hi Sanjay, hi John, hi Roy, Harold, hi Slav. Good to have you all here. Thank you so much for joining. Really, really interesting session today. Going over my top 3 free indicators that you can use to become a better trader, that you can use to get out of the chop of the market and to find better, higher probability setups for you to go ahead and build your profession. Jay, Friday chippy time is what you sacrificed. Hopefully this will be worth it. Hopefully this will be absolutely worth it. Hi, Barry. Hi, Bill. Loads of people in. Really, really good to see it. I wanted to try out a different time today, guys, mainly because I know some people can't make certain times. I know, it's always good to switch it up a little bit. So, if there's any times or anything that you guys prefer for live events like this, let me know. Drop us an email, info@londontradinginstitute.com. Drop me a message directly. Let me know what times best suit you. And hopefully we can try and accommodate for that in the future. But today's absolutely been a busy one. I had some free time for around 5, and people are finishing work around this time, hopefully, ready for the weekend. I don't know about you guys, but I'm actually in a boat race tomorrow for one of my local charities. I'm doing like a boat race in the boiling heat, so I've got to have lots of water, and I've done zero prep. So we'll see how it goes. Yes, mate, lots of sun cream, lots of water. I'll probably come out of it looking like a tomato, but we'll see what especially the students that see me trading live every day. You'll see whether I've got my camera on or not. It will be a good indication as to how badly I've come away from the event. Right, okay, guys, enough of me waffling. We'll crack right on with this really, really cool, exciting event. Got some really, really cool stuff to share with you, and I want to make sure that I fit everything in. So for those that are new, my name's Dan. I've been trading for the last 5-6 years. I actually started off as a student with London Trading Institute. Started off as a complete beginner, had zero experience when I first started. But throughout that time, I've developed my trading career, and I'm now one of the senior traders and coaches within London Trading Institute as well. So, I absolutely love doing lives like this. I love, being on a live with people, showing you what I do, showing you my systems, and just being realistic and honest about my process, and also what's realistic and achievable for you guys as well. So when I first started, like I said, I had zero experience. Within about 3 months, I was funded with $50,000 with a prop firm, with FTMO. Within about 6 months, I had people asking me questions, and I was actively coaching within the business. And within about 12 months, I'd taken it full time. So it gives you guys a good picture as to what is achievable for you. Lots of people have different time availability, and it's really important that you're consistent throughout the approach. And I'm going to be honest, I did all of that whilst having a full-time job as well. So it's absolutely possible. And a lot of the indicators that I'm going to be sharing with you today, totally free. A lot of them I used when I first started out trading, and I've used them really since the beginning. I've done a lot of research on them, found a lot of ways to optimize them. I'm going to share with you some secret sauce, so to speak, on how you can optimize them and stuff that a lot of trading coaches won't show you. So hopefully you can stick around to the end, and hopefully you can get some value from it. Who's ready? Everybody excited? Put a yes in the comments if you're ready to get going. I want you to switch your brains on. I want you to interact. Any questions, if we've got some time, we'll have them at the end. We'll answer them at the end. But hopefully you guys are excited to crack on. Yeah. Ready? Perfect. Amazing. Brain switched on. Get a notepad, get a pen ready, and hopefully we can get cracking on with it. All right. So here we go. Let me make this a tad bigger so you guys can get the full value from today. My top 3 free indicators, okay? These are tools that are widely available on MetaTrader. They're also available on TradingView. They're completely free, and you can customize the settings to how I use them. So I'll show you why I use them, how I use them, and then some secrets into how you can use them as well. Okay. So without further ado, indicator number 1 is moving averages. Okay. Moving averages. You've probably seen them online. You've probably seen them on YouTube, and you see loads of strategies implementing moving averages. And in complete honesty, there are so many variations of different moving averages that you can use. Okay. In all honesty, the number doesn't have a crazy relevance. You know, some people use an 8 exponential moving average. Some people use a 10 exponential moving average. Some people use a 50 simple moving average. Some people use a 55 simple moving average, right? They're just numbers, right? They're just numbers. But if you find something that suits you and suits your style, which I'll show you on how you can use them efficiently and effectively, hopefully you can see the value as to how you can use moving averages within your trading, and how they can kind of keep you out of the chop and help you identify an opportunity. Okay. So what do moving averages do? What they do is they give you a visual representation of how price is moving on average, right? So it's just a line on the chart that shows, you know, where the market is moving. Okay. So there's 2 different types of moving averages that I'd recommend for you to use, that I actively use within my trade plan as well. So you have something called a simple moving average. Okay. And you have something called an exponential moving average. Okay. So you'll see these usually titled an SMA, and you'll see this usually titled as an EMA. Okay. Now, the benefit of a simple moving average is it's very simple to use, right? Very simple calculation. And usually, if you want to use a simple moving average, I'd recommend that you use what we call a 50 SMA or a 100 SMA or a 200 SMA. My favorite, preferably what I use in my plan, is usually a 50 SMA. Okay. All right. Now, the thing is, with a simple moving average, the best way that you can use it is you can use it as what we call a visual representation of how price is moving. So a lot of people use SMAs on, you know, is the market above the 50 SMA or is it below the 50 SMA? If it's above, then we're going to go long. If it's below, then we're going to go short. I don't use them like that at all. I haven't found much success in doing that. The way that I like to use a simple moving average, I like to focus on the slope. Are we pointing up? Are we pointing sideways? Or are we pointing down? Okay. If we're pointing up, I'm looking at taking a long position. If we're pointing sideways, we're in a ranging market, preferably stay out. You stay out of the chop. And if we're pointing down, we're looking at taking short opportunities. Okay. And I'll show you guys all of this in an example as well. But it's always good just to explain. Now, exponential moving averages are slightly different. What they do is they have a different calculation, but they are more weighted towards recent price action. So essentially, it acts relatively similar to a simple moving average, but they are more reactive with current price action. Okay. Now, what does that mean? Sometimes, if you're trading with a 50 simple moving average, it's very smooth. There's not really any kinks. There's not really any dents. There's not really any kind of whipsaws in how the moving average moves with the simple moving average. Okay. So it kind of moves like this. You'll see a simple moving average look very much kind of like this, right? An EMA is a lot more fitted. It's a lot more reactive with price. So you'll find an EMA would do something like this with price. You can see that it's going to be more reactive. There's more kind of twists and turns. And it's up to you as to what you prefer. And I'll show you kind of the benefits between the two. Now, with an exponential moving average, they're fantastic, not necessarily for the slope, but more so for crossovers. So you want to use more than just one exponential moving average. You want to use multiple, maybe anywhere between kind of 2 to 4. I really like using 4 in particular, and I'll show you exactly those. Okay. So let's go and have a look in the charts. Let's show you some real life examples on what you can use. So let's take a look at Euro Aussie, for example. This is a really, really nice market to look at. Okay. So let's take a look at a simple moving average. You can go into TradingView. You can literally type in simple moving average. You can change your settings. And like we said, you can change this to a 50, okay? And you can change the color. I like it to be red. And this gives you a really, really nice representation as to whether you should be taking a long or whether you should be taking a short based on what? So when we're using a simple moving average, guys, this is where I want you to turn your brains on, right? We're going to be pretty interactive today. If we're using a simple moving average, what are we focused most on? Are we focused on whether price is above or below? Or are we focused on something else? If so, what is it? Amazing. So Nigel, Sanjay, John, yeah, all focusing on the slope. Chikezi, amazing. Yeah, focusing on the slope. So in this scenario, we're looking for longs. And as soon as we start to angle down, we're looking for shorts. As soon as we start to angle up, we're looking for longs. And you can see that you can get in on some pretty profitable positions just by using the simple moving average, the 50 simple moving average, as a filter. You can use it as a filter as to whether the market is moving up, whether it's moving down, or whether it's moving sideways. That's how I like to use a simple moving average. Okay. Now, the other one is actually an exponential moving average. So if I put on a simple moving average here and I then just put on an exponential moving average, you can see that the exponential moving average fits a lot tighter to the market. EMAs are much better to use them as what we call dynamic support and resistance. So you can use it as an extra tool for where the market will bounce off of the exponential moving average. You can see, even in this scenario, we act as resistance. We act as resistance. We break, we act as support. You know, we break, we act as support. We act as resistance, right? So EMAs are fantastic for more reactive price action, and they're great for bounces, okay? Now, the alternative is you can use exponential moving averages in multiples. So you can use them for crossovers, not just on their own. You can use them to give you a better understanding as to how this market is moving. So let me break these down for you. These lines that you see on the chart is something that we've developed at London Trading Institute. These are one of the most powerful things that you can use, especially when you're trend trading. Okay, so this consists of an 8 EMA, which is the yellow line, a 21 EMA, which is the blue line, a 50 EMA, which is the red line, and a 200 EMA, which is the green line. Okay. Now, the 8 and the 21 exponential moving averages, these are classed as our short-term moving averages. They help us understand the short-term moves in price. So when the 8 crosses above the 21, so when the yellow crosses above the blue, in the short term, we're likely to go up. If yellow crosses below the blue, in the short term, we're likely to go down. The 50 and the 200 EMA are what we class as long term. Okay? So if the 50 crosses above the 200, or red crosses above green, in the long run, we're more likely to go up. If red crosses below green, in the long run, we're more likely to go down. Okay. So what we're doing is we're using exponential moving averages that are really reactive with price, and we're grouping them. We're saying, okay, where is the short-term direction and where is the long-term direction? Does that make sense, guys? Because I'm about to go into the really good stuff. That makes sense. So we're looking at the lower the number, the shorter the term, right? We use the 8 and the 21 to help us identify the short term, and we use the 50 and the 200 to help us identify the long-term direction. Okay. All making sense? Yeah. So I've got like a big jug of water, so I can keep going throughout this session. Okay. And also, it's okay to say no, guys. We can always revisit it. We can always go over it again. All right. So we've got our short-term group of moving averages. We've got our long-term group of moving averages. Well, what if our short-term group of moving averages are pointing up, and also our long-term group of moving averages are pointing up? So if essentially our 8 exponential moving average is above a 21, it means that we have a short-term direction of up. And also our 50 is above our 200. Essentially, what we see in this scenario here, we have all of the moving averages above each other. They're all in sequence. We have the 50 above the 200. We have the 21 above the 50. And we have the 8 above the 21. This is a market condition we call fanning. The market is fanning. And it looks like a fan, right? As if like it's spreading out and out and out and getting wider and wider and wider. And you can actually see it in this scenario here as well. The market, as it continues to go up, it gets wider and wider and wider and wider until we no longer fan anymore around this area and around this area where the moving averages start to cross over. So we're using them to help us identify whether we are in a strong uptrend, whether we're in a strong downtrend, or whether we're moving sideways. Okay. So if we take a look at this sort of price action down here, all the moving averages are just crossing above and below each other. There's no real structure. There's no real sense of direction. Our 8 is constantly crossing above and below the 21. The 50 is always hovering above and below the 200. They're all crossing over each other. These are the type of markets you want to stay out. Okay? But in these types of markets, these are a big tick. Okay? That's where you'll start to get big moves, and you can learn to try and anticipate when these moves are going to happen as well. All right. So simple moving averages, you can use the slope to identify the trend. If you want to get a little bit more advanced with it, you can use exponential moving averages. You can use them as groups to identify short-term direction and long-term direction. What we want is both groups to be pointing in the same direction. Okay? That's what we're looking for. And we want to trade in the direction of that trend. All right. Now, that's moving averages. We're going to have to move on pretty quickly because that's 20 minutes on one indicator. If we do 20 minutes, 20 minutes, 20 minutes, then we're all good, right? Then I can show you some really live analysis, some cool live analysis. All right. So the second indicator, number 2, is Bollinger Bands. Bollinger Bands are really, really cool. Some people may have come across them when they first start out in trading. Some people not so much. What they do is they help us measure volatility, and they help us measure or help us understand market context. Okay. They can be used as support and resistance levels. You can also use them as a sort of indicator to see if the market is going to break out. And we do this by looking at whether the Bollinger Bands are squeezing. And I'll show you a representation of that. Okay. Bollinger Bands are absolutely fantastic for understanding what sort of market you're in at the moment. Are you in a market that isn't really moving right now? Or are you in a market that's going absolutely crazy? And this is what they look like. They consist of an upper band, a lower band, and a moving average that just goes through the middle. Okay. Now, when the Bollinger Bands, the upper and the lower band, squeeze together, it means that there's low volatility in the market. So in this area, so we're looking at the 1 hour time frame, right? For a few hours here, we had low volatility. Okay. This is low volatility. I'm just going to put low V. Okay. When the market expands and you start to see the Bollinger Bands really extend out, like in this area, this right here is more high volatility. Okay. So it's giving you an understanding as to, is the market moving or is it not? Idowu, how do we deal with the lag? Really, really good question. You be patient. When you see the market, so in this scenario, when the market breaks out, you look for a pullback. You don't just enter right away. Loads of people are really impatient. Impatient people in trading lose money. Okay. All of these indicators are lagging. So you'll get late signals. If you wait for a crossover and then you just press the buy and sell button, you'll lose money. You always be patient. You wait for a better entry. And I'll show you that a little bit later on, I promise. Okay. So I won't skip over that. Don't worry. All right. So what Bollinger Bands do is they help us identify whether the market is moving, whether it isn't. So let's take a look at maybe the daily chart, for example. Okay. And we're just looking at Euro-Oz here. You can see even on the daily chart, these act really nicely as support and resistance. When the market is ranging, it acts very, very nicely as support and resistance. But look what happens when we break these previous highs. We get a little squeeze, and then the market breaks out. Excellent. and so on and so forth. Again, look at that as a trade. I mean, we're talking, about a year ago now, but look at that squeeze right there. We squoze, we broke previous highs, we break out, the Bollinger Bands start to expand out, meaning that we're in a low volatility area, and it means that the market is about to start moving to the upside, and we end up seeing a really big breakout. So essentially, when you see the Bollinger Bands squeezed together, yes, it means that there's low volatility, but you see a squeeze more so as an opportunity. Okay. You're expecting volatility to kick in sometime soon. You're expecting the market to start to move because it's kind of building up. It's waiting for something to happen. And when the market starts to squeeze, you'll usually start to see them break out. Okay. So we're using squeezes to help us identify when the market is going to move. Let's pair this with what we've just learned about moving averages as well. If we go back onto our 1 hour time frame, and this is a real life example. This has happened today, right? Look at the moving averages here. So we entered into an area where all of our moving averages, don't want that, do we? All of our moving averages were pointing up. They were fanning, right? The type of market condition that we really like to get in. And then all of a sudden, we enter a period where the Bollinger Bands start to squeeze, i.e. there's low volatility. But we can anticipate that there's potentially a breakout that's going to happen where we can take advantage of this move up. Some people can catch it, some people might not. All depends on the plan and the way that you try and implement it. All right. So we're looking for these squeezes in the market to tell us, okay, is this market squeezing? Is it ready to move yet? Or we're looking for that anticipation to think, right, okay, this is the type of market condition that I'm looking at. You can also use Bollinger Bands on your higher time frames, like the daily. You can use them as support and resistance levels. You can use them for additional market context. Are we in a choppy market? Are we in a market that's going absolutely crazy right now? And it can give you a really good idea and a really good example on how you trade that market on the lower time frames. Okay. That makes sense. Because again, before I go into something that's slightly more advanced with Bollinger Bands, I just want to make sure that you guys get it. So if you can just let me know, like a yes, like a Y, or an N for no, like yes or no in the chat. Just let me know if that all makes sense. And you can see the power of when we kind of stack these two together as well, right? So like, look at this. The market is aggressively moving down. You know, our long-term moving averages are pointing down. We start to see these squeezes, the market breaks. We see a squeeze here, the market breaks considerably lower, all right? People are saying yes, they're understanding it. It's all also, guys, it's okay to say no. I know it's difficult sometimes to kind of stand out, but it's okay for it not to make sense as well, because I'd much rather make sure that you guys do understand it. There's always different teaching styles to make sure that people do get it. And a lot of the time, John, you're right. A lot of the time, as you kind of implement these indicators as well, you get more familiar with them. You get to understand their quirks and what's good and what's bad about them. All right. So Bollinger Bands, moving averages. Bollinger Bands, I'm going to share with you something that, again, not many people know about or optimize. So the way that Bollinger Bands work, these are the usual settings. You can look in TradingView. This is just the standard. The way that the bands are calculated, they use a statistical method called standard deviations. I'm not going to go into it. You know, I'm a bit of a data head. I used to work in data analysis back in the day. I'm a bit of a nerd, bit of a geek. I love standard deviations. They make a lot of sense statistically to me, right? But standard deviations, basically, they show you how far away from an average that you are. So they can help you calculate overextensions or whether you're outside of, you know, a normal move, a normal bit of data. Okay. Now, loads of people just use Bollinger Bands at the standard 2 standard deviation. Okay. I like to use a 2 standard deviation, and I also like to use a 1 standard deviation, which you can see by this dotted line here. Yes, I understand it looks a little bit messy, right? But when you see what can happen, you can then look to actually optimize the trades that you're taking. You can optimize your entry. You can optimize your exits. So the most profitable traders in the world understand momentum. What Bollinger Bands do is they give you sort of an insight into when that momentum is going to come in. And lots of traders don't understand where to get out. They hold on to a trade for too long, and you know, they go heavily into profit and they let all of their profits slip away. What this does, this way of Bollinger Bands, is it gives us sort of a pathway, like an avenue, and it gives us an area of interest. So the market, when we squeeze, you can see it then starts to move up, and the market gets trapped between the 1 standard deviation, which is this dotted line, and the 2 standard deviation. This is what we call a band walk. Okay. So when the market breaks out, it then gets trapped between the 1 and the 2 standard deviation. And you can see it's actively using the 1 standard deviation as support. You could have caught this full move and you could have exited as soon as you break that 1 standard deviation, meaning you could have gotten in around this area because we had the breakout, our Bollinger Bands start to expand. We have a really nice retest, and you would have been able to hold this trade all the way up to there. Don't get me wrong. Not all trades are as beautiful as that. You know, that's textbook, but it shows you an example of how it can happen. So look at where we are now. We've just had a squeeze. We've just broken above. Well, this could be an opportunity for this market to start band walking. And you can hold on to a trade like this, whether it be to previous highs or whether you want to just exhaust as much out of the trade as possible and wait for it to break that 1 standard deviation. Okay. And you can look at it to the other side as well, by the way. So look here, here's a good example. Not the cleanest, but it works. Squeeze. We break the previous lows. Our Bollinger Bands start to expand out. We're breaking out. You could have gotten an entry on a pullback, which is what I always kind of recommend. Don't enter on the actual breakout. Always try and look for a pullback to get in on a better price. And you can see here, we're in a band walk. We come up to here. That's where we break it. We get trapped between this level. And you could have taken a trade from here down to here, and you're out. Here's another example. We have a break. We break previous highs. We get in on a pullback, and the market continues. This is where you would have exited. So you can use it really quite nicely as a risk management tool as well. All right. So Bollinger Bands are absolutely fantastic. They're really, really amazing tools. And this, using them as a band walk, can be fabulous. So you can, again, use this on the daily time frame. And all of a sudden, you then start to get context. So, you know, if you were in the market at this time and you were looking at Euro Aussie and you saw that the market was in here, it's like, well, we're in a band walk. If I'm going to be taking a trade on this, I want to be going with momentum. I want to be taking longs, right? Again, in here is a really good example. We break out, the market is in a band walk. In this area here, all you want to be doing is taking buys. And same for down here. The market is squeezing, but the market got caught in a band walk for a few days. And also here as well. All of these days could have been just a couple of days of shorting the market, and so on and so forth. Okay? Does that make sense, guys? Yeah? May have been something you've seen before, may not have been something you've seen before, but does that all make sense? Finding it valuable so far? Before we move on to the next bad boy? Yeah? Fantastic. Let me know in the chat, guys. Yes, no, maybe. Gone to sleep. Amazing. Okay. Sanjay, you can look for squeezes on any time frame. It all depends on what your lifestyle is like, what time availability you have. If you look for squeezes on the 1 minute, which I don't really recommend, but if you do, you need to be looking at that chart like every single minute. You need to be really active. If you're looking for squeezes on the daily, you know, when you take a trade, look on the daily time frame once a day, you know. But glad everybody's it's making sense to everyone. Okay. So the next one is what we call, this is my personal favorite. This is our Fibonacci tool. What fibs do, or what we call fib retracements, I'll just put fib retracements there, fib-r, right? Fibonacci helps us identify market waves. It's all color-coded, right? And for any of our students, they have a lot more advanced access to how we use Fibonacci's. There's a lot of information online about Fibonacci's as well, loads of different ways to use them. But we color code it and we say, like, look, okay, with fibs, we look for a pullback to a certain color and then we target that color. So if we pull back to red, we target red. If we pull back to yellow, we target yellow, okay? But the best thing about fibs is that they can, although they're advanced, they make the market quite simple because the markets always move in waves. They never move in straight lines. If they do move in straight lines, it's only for a short amount of time, or when something crazy is going on in the market, right? They always move in waves. We identify these waves as A, B, C, D movements. A and B is your first move, C is your pullback, D is your extension to target, okay? So if we draw the fib in, you draw it in like this. You have A, B, you draw it, you have a C pullback, and then because we've pulled back to the red, we therefore target red. And when that red gets hit, you then simply redraw in the fib. That's your next market wave. This no longer is your A point. Oi, don't want that. This no longer is your C point. It becomes your new A. This no longer is your D point. It becomes your new B. We then have a C and then a D. So look, the market pulls back to here. We haven't hit red yet. We hit red here. Okay. So with fibs, they help us identify what sort of market that we're in. You know, i.e., are we in an extension, or are we in a market that's due to pull back? And you'll be very, very surprised as to how powerful that information can be. Okay? Because if you can see that the market has room for movement, it's got room for movement to its target, then trade in that direction. I use Fibonacci as the main indicator to help me identify direction. My number one rule is always trade in direction of fibs. Okay, my number one rule. And I'll show you an example. All right. Fibs are a bit more of an advanced concept. Okay. So I totally get it if they're if it's a little bit confusing at the moment, but honestly, don't worry. I'll show you an example. Okay. So let's take a look at the markets. We've got 20 minutes, right? We'll implement the different tools and see if there were any setups that we could take advantage of. I think we've had a look at Euro Aussie today. So let's continue with Euro Oz. Let's see kind of how this trade panned out and how we would have kind of taken advantage of it. All right. So let's go into MetaTrader. So what I like to do, I actually like to use additional tools along with our what we call our London Trading Institute trading suite, our LTI trading suite. We have stuff like an algorithm called Trade Detector. We also have automatic Fibonacci's, automatic trend lines, automatic price action stuff. Basically, it just accelerates the process, makes it a lot quicker in order for you to do your analysis. I use all of these free indicators that you're more than welcome to start using. You know, you can use them on your own if you'd like, right? You can use them on their own. But I like to use them alongside what we have in the London Trading Institute trading suite, the LTI trading suite. So we have Trade Detector, automatic trend lines, automatic support and resistance. We have daily trading range, automatic Fibonacci's, all of that good stuff. When you use all of these tools together, they can start to become really, really powerful. All right. So let's take a look at Euro Oz. Let's put this on the chart and let's see what we can find. So what I always do, and for those that have joined me on a few occasions on my lives, you have a pretty good idea as to what I look at already. There's loads of recordings of how I do it, but I always go into what we call our currency strength strategy. This gives us a really good indication as to where the market is moving. So you can actually see here, we got some really quite nice signals to start buying up the euro. So the euro started moving up. Okay. And the Aussie was in an overbought scenario and has started moving down. So in essence, the euro was going to see strength and Aussie was seeing weakness. Okay. So when we pair them together, already we have a good idea that there's going to be an increased volatility trade, a good opportunity for us to buy the euro and sell Aussie. So in this case, Euro Oz is going to go up. Okay. That's what we're aiming for. That's the very first thing that I look at. When I go down into my MetaTrader, I look at my key levels. So I put in some automatic support and resistance. I see whether we're at any key levels, which we're not on the weekly at the moment. What this basically indicates is that there's room for up movement. Even last week, this big green candle here, it was a big bullish week. We can look to trade in that direction. So what I'm seeing on currency strength compared to what I'm seeing on the higher time frames is actually telling me, well, we've got room for movement up right now. And bearing in mind, everything that you see on the screen here is fully automated. It hasn't been drawn in manually. So this is a mix of, like I said, the automatic support and resistance. This is also our trade detector algorithm as well. So these yellow lines and these different indicators, these squares, this indicator and this indicator. It's all part of trade detector. All right. But this is telling us that this has a lot of room for up movement. We can then go down into our daily. And this is where we can start to use our tools to then say, okay, well, where actually are we in the market? We're starting to now hone in. We're starting to say, right, our CSI is telling us to buy this pair. Our higher time frame, i.e. the weekly, is also telling us that we've got room for movement. This is where we can start to implement our Bollinger Bands, our Fibonacci's, our exponential moving averages, or our simple moving averages. And we can get a better idea as to what's actually happening in the market. The very first thing that I like to look at is fibs. So this here is actually telling us in the long run. So look, it's given us A, B, C. So we've pulled back to this white level. Therefore, we're going to be targeting, or the gray level, sorry. Therefore, we're going to be targeting this gray level up here. So it looks like there's pretty decent room for up movement. And we can look at another Fibonacci just to measure a smaller wave within the market. Think of it as like Inception. It's like a wave within a wave, right? But look at this. This is also saying that we've got room for up movement. And it's not a coincidence. It's not a coincidence, guys, that this Fibonacci target matches up perfectly with that next resistance level. It's not a coincidence. It's as if the market is telling us it wants to go up to there, right? There's so many signs already saying that if you're interested in this pair, you want to take it up to this sort of area, okay? And all we've used is fibs. Well, we've used trade detector. We can see that it's acting as support. We've used fibs. We've used a couple of key levels. Now you can start to implement a few more things if you wanted to. You could look at Bollinger Bands. You could look at your exponential moving averages. Personally, I don't use them in this stage. I use the Bollinger Bands and I use the exponential and the simple moving averages when I'm actually looking to take the trade. I use them as more setup criteria, and I'll show you exactly what I mean. All right. When we look at the 4 hour, you can see clearly the 4 hour is actually giving us a slightly lower level on the fibs. So really kind of targeting anywhere within that area looks good. This trade looked fantastic for a buy opportunity. All right. Hopefully you guys can see that, right? I'm not just confusing everybody. Everybody can see based off of what we're looking at, there's room for movement up. Would you agree? Yeah? Excellent. And if you wanted to, you can put in a moving average. Let's take a look. Let's take a look at a 50 simple moving average. Would you look at that? Pointing up. Remember, we use the simple moving average as a slope. Pointing up. Excellent, excellent, excellent signal. Okay. Looking for buys. Just for simplicity, we can also look at the 4 hour. So the same chart, just different software for the EMAs. Look at that. We have them fanning out, meaning we're more likely to be going up. All right. We can take a look at our Bollinger Bands. Would you look at that? We've been squeezing. If we go down into the 1 hour, you can see that that squeeze has become a lot more apparent. It's a lot more, it's a lot easier to see. That's what I'm trying to say, right? So let's go back to our MetaTrader 4 software, right? So this is the criteria that I'm looking for. I've basically used all these different tools to say, okay, well, Am I trading in the direction of the fibs? The fibs are telling me that we're going up. Yes. It looks like a good opportunity on currency strength, which is also good. Our 50 simple moving average is pointing up. Amazing. Our exponential moving averages are pointing up. Amazing, right? Our Bollinger Bands have recently been squeezing and we've recently broken out, which means that this sort of market is fantastic for buys up to those areas. Some people could have bought on this breakout here. If I put Bollinger Bands in now, let me show you. So we want Bollinger Bands, right? Some people could have bought on the break of this high here. And then you could have gotten in on a pullback a few hours ago and then taken that trade, right? Or if you want to be more patient, you don't have to take that trade today. It could continue to still go up, right? But maybe Monday, maybe Tuesday, we might see a bit of a pullback. And preferably, we want it to kind of pull back into an area where there's at least 3 reasons as to why you should buy it. So my 3 reasons would be this. Let me switch over to TradingView. My 3 reasons would be this. They would be a support level, okay? So if we come down into this area, we've got a really nice area of support. All right. Preferably a Fibonacci pullback. So if we go down into maybe the 15-minute, we can see clearly that this market's really overextended. So if we just draw something like that in, we can see even in this area, there's a really nice 50% pullback on the fib if we start to pull back now. Okay. So support, Fibonacci pullback, and I want to use an exponential moving average. So we can see on the 1 hour, we have our 21 exponential moving average moving up into that area as well. So this is what I'm looking for. 3 areas or 3 reasons why I should buy this. I'm looking at a fib pullback. I'm looking at a support level. And I'm looking at the 21 EMA. Oh. Because remember what we said earlier on, your exponential moving averages can act fantastically as dynamic support and resistance. We have 3 reasons as to why we should buy it in that area. Rather than kind of jumping in and seeing this market going up and having a bit of FOMO, the likelihood is we'll probably lose money. Yeah, don't get me wrong. We can't control the market. It could just continue to go up. We could make money, right? But it's not high probability. We want to get in at the best price possible. We want to kind of act like as if we're a tiger in the bushes, ready to kind of pounce on its prey, right? Sometimes your prey just wanders by and you realize that maybe it's a bit too fast for you. It's not the right time. So you stay quiet, right? And you know, if you were to pounce, it will just run away. And then every animal in the area will know where your position is, right? But if you wait in the bushes and you just wait for the perfect opportunity when the prey has its back to you, right? And it's, you know, eating some food and it's not really got any attention. It's as if it's deaf and it's super, super close. It's too good not to jump on it. That's where we want to be. We want to be that tiger where it's obvious to go and jump on your prey, right? Who thought that I'd be talking about tigers and jumping on food, right? But that's what you need to be like in the market. You need to be patient. You need to wait for the right opportunity. And this is a much higher probability trade than where we are right now, because there's more money to be made down here than up here. All right. Way more money. Okay, guys. How's that? Has that blown your mind a little bit? Has it made a lot of sense? Has it sent you to sleep? It's different people like different things. But hopefully you've at least gotten some value from that, right? You can see how me as a professional trader uses these tools and looks at the markets in a certain way to go, okay, this is what these tools are doing. These are the best areas to enter. This is how I can now start using some free tools, right? Now, what I'd say, guys, is for anybody that wants access, you can use the free tools. I really encourage you to go away and start using those free tools like I've mentioned. They're all available on TradingView. They're all available on MetaTrader. But we actually have recently released something called the LTI Trading Suite, which essentially allows you to gain access to all of the different indicators that we use. So Trade Detector, the automatic support and resistance, the automatic Fibonacci's, all of that good stuff. All of that's included in the package. There's even options for you to watch me trade live near enough every single day as well, so you can find the same opportunities as me. All right. So what I'll do, let me just quickly grab a link for you so you guys can at least, register your interest if you're open to it. Take a look at the details, and if you have any questions on it, there should be like a little WhatsApp link where you can message me directly as well. But you can go to this link here, register. You can register your interest, and you can see all the details around kind of what's included if you wanted kind of the more advanced tools. Don't get me wrong, it's not the best for like absolute beginners. You can absolutely try it out. But part of it also includes, like, we have a scanner service where you don't have to worry about doing all of the analysis yourself and analyzing loads of different markets. You can literally just wait for an opportunity to pop up on your phone, and then you can go in and do it. So it's a massive, massive time saver. Let me just take a look at some questions before we finish up. I get the technique, need to get my head around it. Absolutely understand, John. It's a lot of information all in one. What I'll do, we said that we weren't going to record it, but we had quite a lot of people ask for it, people that have registered. So we'll send it out to registrants so you can take a look. Chikeze, when combining Bollinger Bands with the 4 EMAs, what MA would you have the Bollinger Band? So the Bollinger Band is always standard 20 moving average. It's always a 20 MA. So don't change any of the settings in the Bollinger Bands. All right. Amazing, guys. Hopefully you enjoyed it. I've seen, like, we've had so many people turn up today, and so many people have stayed on. So clearly you've found it at least interesting, or you just really like looking at my face. Jay, the currency strength strategy is something that we have built in-house. If it's of any interest, you can just message us directly. It's all actually on the link above. So if you go to this link, register your details, there's an option to drop me a WhatsApp link. So drop me a WhatsApp message, and I can send you the details on that. No worries. But it's always good just to take a look, and you can get a better understanding as to what's available to you and how you can kind of take your trading to the next level as well. Plus, I'm always up for having a chat with people. So if you do have any questions, or even if you need some additional guidance, if you want to be pointed in the right direction, you can register, get my WhatsApp link, and you can just drop me a message, and I'm always happy to help. I'm a pretty open book. We actually have quite a lot of students in here already, people who have been on either like a one-to-one coaching program or have taken up online courses. Hopefully you guys are kind enough to say what your experience has been like, and hopefully you guys already know that I'm pretty much an open book, so you can ask me anything, and I'm always more than happy to help. But as always, guys, thank you so much for joining. I'm glad that you enjoyed it. I'm glad that you found it valuable. I always love doing sessions like this, and I love seeing new, different people coming into the community, coming into the group. And I can say, like, look, you're in absolutely the right place. So thank you so much for joining, guys. I really appreciate it. And I will get a recording and all of that sent out to you for anybody that's looking for it. All you need to do, guys, click on the link, register your interest, see what else is available. And at the very least, you can drop me a message if you do have any additional questions. But at that, guys, thank you so much for joining. Have a fantastic evening. Have a fantastic weekend. And hopefully I will see you next week. Take care. Bye-bye.